Good to be back finally after all this time. Sorry I was going through the relocation. I recently moved to Dubai and I also started my new job as a quant trader. Yeah, it's been rough on me. I had to get used to a new city, new job. So it's been a lot of moving around throughout these past 6 months. But now I'm back and I'm ready to upload more stuff on YouTube, back to my personal trading, and I want to share a lot of more information with you and also show you more quantitative stuff and show you how market behaves in the environments where new president Donald Trump decides to speak. And we had a beautiful example this week. Literally, if you see my charts, over the Monday he discussed the tariffs, and you can see like we had a huge gap opening because a lot of investors started fearing the market going south. They started fearing the tariffs. They were thinking like, oh, we're gonna move our money into safe haven, and also Fed not moving forward with interest rate decisions. They decide to keep the same, so taking a slower approach. Investors decide to move their money into safer assets, and the safest asset in the market is US dollar. And you could see a huge gap from 0.3 down to, I think it was opening at 0.2, which is around, if you take a look, 118 pips move, which is pretty much a lot for stable pair like Euro US dollar. And let me show you my trades throughout this week. There were just only 4 trades. I didn't do any trade on Friday because okay, I think it was an FP, so I decided not to trade. Yeah, it was an FP, so I decided not to trade, and I think I'm overall up 3%, considering I haven't trading for 6 months. Is pretty good comeback. So yeah, as my strategy always goes, I was looking at the market and 15-minute time frame. Nothing was happening around during the London zone, and I decided market to ride, and then I came back around 8:30. So when I was back at 8:30, I saw the liquidity was forming the pole around here. This was the point of control, also aligning with this candle, and we did see that this was beautifully supported like 1, 2, 3 times, and that caused the breakout. So in my opinion, I was like, we either coming back to this volume point of control in the volume, or around like this 1, 2, 3 highs. So I placed my order around here, and then I got beautifully filled in. Beautiful trade, 1 to 2.79 risk reward ratio. I think I took around 2.5 due to commissions and spreads. So pretty solid trade overall. I'm happy with it. It was beautiful, and it was New York session 1 trade on Monday. The next day I was applying for continuation because Trump said he's not going to impose tariffs literally on the February 3rd. So market decided to go in back neutral, stabilizing. So I executed the trade with a follow-up, but I got stopped out, which was a small stop out, pretty unlucky, which was what, 7.5 pips away. It's okay, happens. And then market went to my TP. I'm okay to taking this loss because it's totally fine. And the problem was that I didn't really follow the rule. Rule was telling me that not buy here, but I still did it. I just basically acted on my fundamental biases and not really adjusting my technical biases towards my fundamental bias, and this caused me a loss, which is fine. And then I wanted to re-enter this trade around I think around here. I wanted to execute one more, but with a stop loss right here, but I didn't do it because I was waiting for the market to go up still, but I wasn't confident in myself to taking the loss, and I also was rushed in the behavior, so I didn't really feel a good mental state to execute this trade. Then on Wednesday I had another looter, which was pretty unfortunate. I got a good execution with proper stop loss, and then my 1 to 2 risk reward ratio was here, but then I was tightly away from, I think, like half a pip or something. Yeah, 1.5 pips away, and also due to spreads I was like 2.5 pips away from the TP, and I didn't take off, and then I forgot about the trade completely because of work. I stayed until late, and then I came back already in the morning. I was like, oh shoot, my trade, I forgot about it, what happened? And then I realized that I just lost the trade, so it's totally fine. On Wednesday, nothing much really happening. We just had a small drop over the London session. You can see from 3 a.m. 2 to 3, 4 a.m. it was drops, so I didn't have really much anything to execute. There was no liquidity, no volume for me aligning. And then I had a good setup, breakout setup for the New York Open. So I executed after I saw New York playing out at 9:30. I saw a big candle spiking up, it closed, and then I executed my limit order around here. I got filled in. Market still went slightly down, Probably it counted this volume of control, which was around this candle right here, and I let it ride. And then on Friday I didn't execute anything, and I do believe I ended up, I think, like 3% up overall this week. So if I actually do, it was 2.79 -1, which leaves me around 0.79 plus 226, 3%. Yeah, I was up 3% overall this week, which is totally fine to take. And you can see, even after this long time of me not trading and coming back, I still follow my rules. I still have my strategy intact, and I'm pretty confident in it. I know my fundamental biases, and that's it. I just follow it. This is how it is. It's not about market conditions. Your setup is always there. Your strategy will always work if you're following it, and if you have it tested and properly executed many times and have collected your data. So yeah, going forward, I'll be posting on the weekly updates. I'll be talking more about the markets, fundamental examinations, the fundamental analysis to be more precise, how to analyze the market, and also I'll talk about the different quantitative strategies, different stories that market tells you, how to analyze it, and how fundamental analysis really helps you into technical analysis.